Bloomberg Audio Studios. Podcasts, radio, news.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Another stock that's been rallying in a big way today, in fact, up about 8.5% at its highs, is Wayfair. Stock right now still a gain of about 3.25%, rallying after earnings results came in better than expected as consumers brought forward spending while suppliers are holding back from price increases. We should point out, though, the stock's off about 30% year to date. Kate Gulliver is the Chief Financial Officer at Wayfair. We're delighted to have her back with us. She joins us once again from Boston. Kate, how are you? And how is your environment? It's been about a month since we last talked. How has it changed?
Yeah, great question. I guess I just start with first, that we printed this morning. We feel great about the quarter, the strength in the top line, frankly, in the U.S. segment, and ultimately the flow through to adjusted EBITDA, the enduring strength in the business. So, we feel like we're on very solid ground right now.
We saw earlier, and even earlier this week as well, from companies such as Meta Platforms, but mostly Microsoft, and then, of course, with the GDP figure, that companies and people are pulling purchases forward. I'm curious what you saw on the platform over the last month in terms of what customers are buying, how they're buying it, and how that behavior has maybe changed.
Yeah, it's a great question. We shared on the call this morning, there's one category where we have seen some pull forward of demand, and that's in appliances. So, we don't do a large business in appliances. We got into that business a few years ago, but that category, we have seen what we would call, a pull forward of demand. We actually have not seen a pull forward of demand in sort of the core furniture part of the business. We look at this on a variety of different metrics around search volumes, traffic, conversion, et cetera. And from everything that we're seeing, over the past month, to your question, we've not really seen any discernible pull forward on the furniture business, really just on the appliance part. And the appliance part is a very small part of our business in total. And obviously, the last month that you're referring to, would be post the quarter that we posted this morning, which ended on March 31st.
Is that lack of pull forward a sign at all to you of a lack of confidence that the consumer has in their situation right now? Is it concerning to you? These are obviously big purchases. We're talking furniture here. If consumers don't feel comfortable buying those, then they might not buy.
Yeah, great question. So, first, our average AOV is about $300, right? So we sell a range of products and the average ticket size of about $300. We did say actually that demand had been quite healthy in April quarter to date period. And so we feel very good about where demand is. I do want to point out that our category, we're hearing a lot of noise in the consumer, and certainly something that we're following very closely and, monitoring quite thoughtfully. But we are in our category, we've been in a position where our category has actually been down for multiple years in a row. At various points from sort of back half of 21 to current, our category has been down double digits during some of that time. Over this last quarter, we still saw the category under pressure in the US. So we're talking about a category, that has had actually sort of a negative consumer impact for some time after obviously a big pull forward in the beginning of COVID.
Well, that's interesting. Yeah, exactly. Right. COVID was crazy, right? I'm assuming we all talked about everybody doing, buying for their home because they were living, working, doing everything in their home. Does the environment feel, after a couple of years of things being pulled back, does it feel more normal? How do you describe today's environment? Especially, Kate, when we talk to so many leaders and heads of companies where, they're using the word uncertainty. You've got, as Tim mentioned, companies giving out dual earnings outlooks depending on what happens out of the White House and in terms of tariffs. So I'm just curious how you would kind of describe it.
Yeah, it's a great question. So maybe to start with our category and some of the evolution of our category over this period. To your point, we had significant pull forward in the category in the COVID time, right? So in the sort of 2020, 2021 time. Since then, the category has been down consistently since then. And actually, when we look at the data, if you were to take a normalized growth rate from 2019 to now, typically is a category that grows somewhere on the order of 3 to 4% a year. If you were to sort of straight line that out, we're quite a bit below where the trend line is. We actually think on a basis or on a sort of total sales basis for the category itself is actually below, starting to be below 2019 levels, right? So we're seeing a category that has historically been over the last few years quite depressed, which may be different than, some of the other consumer discretionary categories that folks are referring to. That said, yes, it's absolutely an uncertain environment. This category, well, it's not down as much as it was in sort of 22, 23. It was still down last quarter. So our focus then becomes on share gain, right? So if the category is uncertain, if the overall consumer environment is uncertain, what we want to do is make sure that we're gaining share. We've done that consistently every quarter since the fourth quarter of 2022, and that we're doing that in a very cost-disciplined way. And that's where you've seen us grow our margins and adjusted EBITDA dollars throughout that period as well. So, certainly there's a lot of noise out there. There's a lot of uncertainty. Within that, we're trying to control what we can control. And to us, that results in share gain and, EBITDA growth.
Hey, Kate, I think it's fair to say maybe not all customers know that you're a marketplace. You don't necessarily have inventory when people are looking at the Wayfair platform. But you have relationships with all of these suppliers, and you have many suppliers. But I want to ask you to characterize what you're hearing from these suppliers, because they are the ones who are affected by tariffs. Such a small portion of this stuff is actually made in the U.S. What have the conversations been like with the largest folks on your platform? What are they saying?
Yeah, my understanding is it's something like more than 20,000 suppliers that you're working with.
Yes, that's exactly right. So I appreciate that you know it. And to your point, mostly to the consumer, it reads like a retailer on the front end. You're absolutely right in terms of the dynamic. But on the back end, we have the benefits of a marketplace. And we do think that is a benefit to us during this time because we work with over 20,000 suppliers from around 100 different countries, including the U.S. There is some, domestic manufacturing in this space. But, we work with suppliers from all over the world. These suppliers range in size. They have a wide range of categories that they're involved in, and those categories all have different dynamics. I will point out that no single supplier comprises any meaningful portion of our sales. So, from a sales perspective, these suppliers are quite diversified. And what we are focused on with our suppliers is partnering with them right now to have conversations around what levers are at their disposal, depending on, how the environment moves from here. And to us, that means helping them understand, where we're seeing demand, what we're seeing in terms of price elasticity. So if they were to change wholesales, what does that result in from a price elasticity perspective? And how might that impact them in their given category? Many of our products are highly substitutable. So, let's take this chair I'm sitting on right now. We probably sell many chairs quite similar to this chair. Mm-hmm. So if you're a supplier and you raise price in that category, you could be at a disadvantage than somebody else who's been able to maintain a more cost-efficient wholesale. And so that's something we help the suppliers understand and, share information with them on. We also talk them through what other levers they have during a time where you might have some, demand disruption. How do they think about leaning in and using our 3PL program called Castlegate to be able to get inventory, into the country? We actually did talk about in the first quarter some pull forward of inventory into the Castlegate network to land ahead of, tariff conversations. How do they think about promotions? How do they think about supplier advertising or retail media? So all of these are tools in their toolkit, and our focus is really partnering with these suppliers so that they're getting the same information that we're getting, and we're helping think through, these different levers and what is best to pull when.
I am curious. In terms of the consumer, you said that they bought a lot of appliances. That's a smaller part of your business, or small part that they weren't pulling forward in terms of furniture. Is that, I don't know, you understand this world more than most. And I'm just curious, do you think consumers, we've talked about worsening consumer sentiment. We've all seen the numbers. That's sentiment. And then there's actual actions. Do you think the consumer is slowing down? The consumer is stressed right now?
Yeah, I guess I won't speak to the consumer broadly. I can tell you what we're seeing in the category. The category itself was down in Q1, right? So we look at a variety of different panels for the category, various credit card panels. We also talk to suppliers because we work with 20,000 of them. So we have a pretty good read on what's happening with the category as a whole. And when we look at the U.S. for Q1, the category was down. Now, in our case, that's a continuation of a trend that's been going on for quite some time. In the category, as I said, has been down since, sort of, let's say, back half of 21. So the category itself has remained under pressure. We haven't seen an alleviation, of that pressure. That said, we feel good about our navigating through that and our ability to continue to gain share in that environment.
How do you see that holding up if tariffs remain in effect, or if we don't see a 145% tariff come off of China?
Yeah, I'd go to the dynamic of the marketplace and what we're really focused on driving there, which is helping suppliers understand the competitive dynamics and our ability to work with suppliers from all over the world. So certainly we work with suppliers from China, but we work with suppliers from India, Turkey, Brazil, Southeast Asia, Mexico, the US, right, everywhere. And so what you'll see happen, as different tariff rates evolve, is suppliers want to be quite prudent in making sure, particularly because, frankly, demand has been so slow for them over the past few years. How do they be thoughtful about, if and when they modulate prices and if and when they modulate, availability? Because what they want to do is maintain share. In some cases, if they see an opportunity, gain share within a category that they sell on us. And this is where the substitution helps, because if one specific geography or region is more impacted than another, you can see that other region will actually start to take share, right? So suppliers that actually are not disadvantaged from a price perspective will take share within, say, this share category.
All right. So it sounds like glass more half full in terms of the outlook. I'm just trying to gauge. I mean, it does sound like your suppliers have a lot of move, but give us an idea. If you had to use a word to kind of describe the environment today, you have such a great read on the consumer and spending. Just as we wrap up, what would be that word?
Yeah, it is a very fluid environment, and our focus is on controlling what we can control. And we think we're set up quite well to continue to offer our consumer the best value. And, that's the best that we can do during this time, deliver for our consumer. And we feel in partnership with our suppliers, we're going to be able to do that. And we're set up on a nice cost structure and a nice balance sheet to be able to continue to deliver that going forward.
And your suppliers feel confident about being able to navigate kind of all this craziness that's going on?
Yeah, I mean, certainly, we want to partner with them to help them because there is a lot of noise out there. And so we're trying to help them sort of navigate through this. But you have suppliers, a range of scale, a range of sophistication, a range of geographies that they work in. And, we feel good about our ability to help them navigate through.
All right. So enjoy it. Kate, thank you so much. Be well. Kate Gulliver.
Thanks. Nice to talk to you again.
Same here. She's the Chief Financial Officer over at Wayfair. As we mentioned, their stock definitely popping and outperforming the overall trade today, up as much as 8.5%. Right now, Tim, with about a 3.25% gain.